Welcome back, traders. We have a special guest today, Tim Melvin of the Deep Value Ladder. Tim, how you doing this morning?
I'm doing great this morning down here in Florida. Guys, how are you?
We're doing good. Dennis, say hello to Tim.
Hey Tim, how's it going? I'm jealous of you down there in Florida because I'm up here in the near north right now, and I was looking at snow flurries and sleet yesterday. So I think you're doing it right there, Tim. I think I should be going down there to Florida with you.
Yeah, this is the time. This is the time of year I start screenshotting the weather reports and sending them to my kids up north.
Okay,
we're all jealous.
One thing here for people in the chat room here, if you have any questions here for Mr. Melvin, please shoot them over to us, and we will surely try and get him to take a look at some of your favorite issues here. But just starting out the interview here, Tim. I mean, you are a value investor. Could you just go real quickly? What criteria, what strict criteria do you use when evaluating stocks?
Well, I'm glad you used the word strict because we are extraordinarily strict. There's a lot of guys practicing relative value or versions of value. We pretty much do it the way Ben Graham drew it up. We focus almost entirely on asset value, tangible book value, and creditworthiness. I mean, that's our two major factors when we're evaluating a stock.
Now, okay, so when you're looking, what is your time frame? Because you can say okay, I'm a value investor, but what is your time frame? Are you looking at companies for years? Are you looking for months? What is your overall time frame there, just to get a feel for you?
Our time frame is until it works.
Until it works. Okay, so that can be a while.
Sure.
Dennis,
you're much longer than us as day traders. You're much longer time frame than us.
We've owned some stocks 6 months where the market recognized the value very quickly. We just had that not long ago with Century Casinos, where I think we held the stock for 3 months because it went up that fast. Okay. I've still got stocks on my books that I bought in 2003.
Okay, so you look basically, you come up with the value with all your formulas and stuff behind the scenes, and when it gets to where you feel like it's fairly valued, that's where you would probably take the trade off.
Exactly. And where the beauty can come in is if you get a company where the fair value keeps going up every year. Right. And the price never catches up. That's where you get, what Peter Lynch used to call the 10-bagger stocks.
Oh, yeah, Peter Lynch. I remember reading his books back in the day. That's when I first started getting into investing and trading was Peter Lynch. So I remember him well back in the mid-'90s. Now, how long do you typically look at a stock and evaluate it before making your move? Is it, do you look at it over the course of weeks and then strike, or is it a matter of if you see something and it looks awesome right now, first time you see it, would you buy it the next day?
Once it shows up on the screens as trading at our level of tangible book value, we're very close to it. We do the homework. We read the 10Qs, the 10Ks.
Yeah.
But if it passes, if it trades below 80% of tangible book, passes all of our creditworthiness tests, and there's no obvious fleas or scars in the financial statements, we're a buyer right then.
Okay. Now, are you all in at one price? Do you come in and buy your whole position right away, or do you try to scale into the positions?
No, we start buying at 80% of tangible book, and then for each company we have an estimate of corporate liquidation value. In other words, where you could just sell everything off, pay the bills, and walk away. And if it dips below that, then we double down.
Okay, gotcha.
And along those lines, I mean, are you using, protective stops at all, or do you ever try and use the options market to enter positions or hedge your overall position?
Okay, I do not ever use stops. They just totally counterproductive to what I'm trying to do as a value investor.
Right.
However, options, I love to sell puts to back into positions when market conditions allow it. Right now you've got low interest rates, low volatility. Option premiums on most of my stocks are rather pathetic at the moment.
Gotcha.
In 2008, 2009, when you had a lot more volatility around, you could collect 3, 4, 5% to agree to buy a stock that you liked at the current price at a lower price. So at that point in time, it becomes an incredibly valuable tool.
And I've got other trader friends that actually employ those same strategies, looking, from value investors or their value investors, trying to do the same thing, saying, oh, I would buy the company down here at $20 it's at 25 right now. Why wouldn't I write the 20 put? Because if it gets down there, I'm going to buy it anyways. So it's just, and if it doesn't get down there, well, I get to collect that premium. But you make a good point there too. When the volatility is so low, those premiums, like you say, can get pretty pathetic. And I actually would say the same thing right now. I always say when the VIX is trading around like 13 or 14 or something, I almost want to be like a net option buyer as opposed to a writer. But when the VIX gets up over 30, that's or 25, 30 or getting even higher back in the 2008, 2009, when it got up to ridiculous levels, up to 60 or 70, you definitely are getting paid to write those options.
Yeah,
Okay.
I mean, at that point, it just becomes common sense. But, in a market like today where you can only get 1% for the month,
Joel, did you want to ask something?
Right. You have your models, Tim, and of course they're helping you identify undervalued stocks. But do you use your model too to identify overvalued stocks, perhaps to use as a shorting opportunity?
I do run tests on the larger cap stocks, looking to see what's overvalued, but it's mostly for informational purposes. I confess that I do a little bit of shorting from time to time in my personal account, but it's what I call a chicken short. I'm scared to death to be short a stock that's got nothing but air over top of me.
Right.
If a stock's overvalued, it's popular. It's going to have momentum going against you. So
Right.
every once in a while, much like going to Vegas, I will put on what I call chicken shorts and use put spreads to short some stocks I just think are egregiously overvalued.
So where's
Like
the
what-
value at right now in the markets, Tim? I mean, we're talking about a lot of different issues. What has your attention now?
Well, there's not a lot. Okay, the opportunity set has been steadily shrinking as the market goes higher, as I'm sure you can imagine. Right now, the pockets that we see are, if you dig it up out of the ground, it's cheap. That's the gold and silver miners. I have a strong preference for silver miners over gold miners. Generally speaking, they tend to have stronger financials. But iron ore, we're long Cliffs Natural Resources and have been for a while now. Oil and gas. We have a lot of names in oil and gas that are trading at 50, 60, 70% of tangible book value. And while there's a glut of gas right now, that's not going to last forever. Eventually, conditions improve in the energy patch. But if it comes up out of the ground, chances are it's pretty cheap right now.
Yeah.
And then the other area is community banks. I mean, that's been involved in that space for 25 years now. It's the most profitable ground for a value type, especially in conditions like this.
And
Do
how
you
are-
pay any attention to like technical analysis too when you're looking at these? Like, do you look at charts and try to get the timing right on some of these things sometimes, or are you just purely fundamentals?
Purely fundamentals, and I'm not one of those value guys that says that the technicals don't work. Andrew Loeb did a great book. They work if you know how to use them. I don't know how to use them. I've got friends like Tim Collins, Bob Byrne, and other guys that look at charts and they come up with all this wonderful information. I look at charts, I see doggies and horsies. I mean, so I stick just with the fundamentals.
And I can relate to that. Like, there's a lot of people that use different trading strategies, and what I always say, if it's working for you, go with it. The whole thing, there's lots of different ways to make money in this market. You just got to find something that works for you, and it sounds like the fundamentals do work for you.
Yeah, and that's an excellent point. There's lots of ways to do this. I know rich guys that use charts. I know guys that have made fortunes doing momentum and growth stocks. The real trick is to find the method that fits your lifestyle and personality. If you do that, you'll be profitable.
And looking overseas, I mean, if there's not a lot of value here in the U.S. market after we've had this tremendous run, are there any values overseas that are on your radar?
Sure. Almost all of the large European banks are still trading at 50 and 60% of book value, even though they've moved up a bit. Most of the shipping stocks are based out of Greece, and I am wildly bullish on shipping stocks, not as a macro call, just because there's a lot of these companies. This is a baby and bathwater situation. They are just so cheap, and the financials indicate to me that they're strong enough to survive until they thrive. And there's some really interesting money tiptoeing into the shipping space. And they're mostly.
I was just going to ask, do you have any specific shippers that you're looking at specifically right now for our listeners?
Sure. In the last 2 weeks, we bought Starbulk. They just did a backup secondary offering to provide themselves with some cash for buying new ships in a depressed market. And as we dug into the offering, we figured out that Howard Marks at Oakmark was buying most of it and holds a 20% position in the stock. That got me real interested. He's just a very smart guy who's made a lot of money over a long period of time. When we dug in, this thing's trading at 40% of tangible book value, and they can pay their bills.
Now, the European banks, you mentioned those two. Any specific European banks that you're looking at like at this time, or are you already in and they've already kind of run a bit, or do you still feel there's some opportunity here right now?
There is some opportunity, but put common sense to work and let these things come back a little bit.
Okay.
Because they have run. Yeah, but like Société Générale in France, Commerce Bank in Germany, and Royal Bank of Scotland in the United Kingdom, I think all represent extraordinary long-term values. A long-term holder can just buy them right here and close their eyes, but you could probably do better with a little patience.
We're on with Tim Melvin of the Deep Value Letter for your listeners just joining us on the show here. If you got any questions on issues that are in your portfolio or think are entering in your portfolio, maybe we can get Tim's value opinion on it. Just a couple issues here that are popping up in the chat room here. Is there still value in Best Buy is the question here. The stock was written off for dead here, has now had a monster rally. Have you been participating in this stock, or what are your models telling you now?
No, I have not been in the stock. Book value for Best Buy is about $10.58.
Whoa.
Yeah. So the stock, the stock's made a nice run, and business is getting better, but it never got to that point where I'm like, yeah, this thing's $8. Let's start talking about it now.
So if it would have got down into the single digits, you might have got interested, and that would have been a heck of a trade, I guess.
Might have, but it probably, to be honest, at the time, probably would not have passed the credit and fundamental scores that we do.
Oh, okay. Now, what do you think of like a stock like Amazon? Is this just purely a momentum trade? Like, because obviously when you look at value, everybody says, well, the value doesn't make any sense here. What's your take on a stock like Amazon?
Amazon's a great company. I have boxes delivered here almost daily. I'm a heavy user of it, and much heavier since I got married. Funny how that works. But this stock is not. You're not buying the business value of Amazon when you buy the shares. You're buying a betting slip in a popularity contest.
Right.
At triple-digit earnings, it's never going to get on my radar screen.
Yeah, like when you have those earnings multiples that are just non-existent. So, like even like a Facebook or something, is that another one that it's just basically just these momentum plays that are continuing to drive it higher?
Yeah, they'll never show up in one of my portfolios because they're never going to make my radar screen until you get But having said that, until you get a 2003 event.
Okay, Camco Financial, Mighty Joe Young said that we should ask you about that one. That's something that had just a nice pop here from the $4 level back over $6. Is this something, what did you identify in this company? And when you get this kind of parabolic move here, are you tempted to take some chips off the table?
Well, this stock is just a small community bank, and we run a second letter called Banking on Profit that deals strictly with investing in community banks. We own about 30 of these things right now that trade below the 80% level of tangible book, and Camco just happened to come onto the radar screen after we read their FDIC call reports, gave them a pass on the financials, said, hey, this thing's cheap enough down here to be in the portfolio, so let's put it in. I don't have the only pencil in town. The guys at Huntington Bank also saw that the stock was very cheap, and the branch network was a great fit for them. So the timing here is strictly a matter of luck, guys. This could happen to any of the 30 stocks in the portfolio, but Huntington came in and bid $6 for the thing like a week after we bought it.
Windfall there.
But as far as taking money off the table, no, we're not. We think there may still be a slightly higher bid, and the deal is tied to the stock price of Huntington because you can take cash or stock, and Huntington's been going up. So the deal's getting richer on a daily basis.
Well, through the transition, do you start to do a valuation now on Huntington Bank shares to see if you want to, be a participant of this company, or do you just, wipe your hands clean, once the transition's done and move on?
We'll do it. We'll do an evaluation. And the truth is, we do like Huntington. Our price in Camco creates Huntington below book value, so we're probably just going to hold the new shares of Huntington Bank.
Okay.
I just want to ask you too. So now, is there any other sectors here like that you think that there's some value? And you've mentioned, the European banks. You've mentioned some of the miners and stuff. Is there any other sectors that you're looking at or kind of eyeing right now and waiting for that nice setup here?
Well, I really don't look at sectors. The fact that I have sectors in the portfolio is strictly a function of they got really cheap. And right now, no, there's not really any one sector that I can look at outside of the shipping, the community banks, and stuff out of the ground and say, wow, there's a lot of cheap stocks in that space.
Right.
Okay.
Joel,
Well,
is there anything?
no, I'm just would like to see some questions here coming out of our chat room for our investors that are looking at any other individual issues here. Certainly like to get Tim's opinion on it. Just another issue. I mean, I know it's a high flyer, but is trading at a low PE, and it's always in the news here. So, could we just get your opinion on Apple?
On Apple, it's not going to get below book value anytime soon. It hasn't since 2003 when it did trade below book value for a period of time. But Apple's a great company, but it's not my kind of situation. I mean, I know Carl Icahn and some other guys that model business values differently have been involved with the stock. But yeah, great company, not on my radar screen.
Okay, Tim, thank you very much for coming on. We've had Tim Melvin here of the Deep Value Ladder discussing a very important aspect of trading that we pay attention to the technicals. Tim pays attention to the fundamentals here. Tim, thank you very much for coming on, and we certainly hope you can come back again in the near future and share your wisdom with our investors.
All right, I look forward to it, guys. Thanks for having me on this morning.
Thanks, Tim.